Welcome back, everybody. I'm Edward Builder, and I'm back today with two big questions for all of the viewers. Are the markets heading for a crash? And what could happen? With everything being so sensitive right now, some very common catalysts could really burst these bubbles and bring the entire economy crashing down. I want to share with you guys some of my perspectives on what's happening in the national headlines. We're going to check in on what the banks are saying the market is currently doing. We're going to talk about some supply chain issues, a big Apple announcement, and some of these catalysts that could really bring this whole thing crumbling down. I want to thank you all for your comments and tuning in each and every day. You guys are amazing. You're really opening my eyes as to what's really going on out there nationally. I'm located in Northeast Pennsylvania. I'm sharing my perspective, and I love hearing what's going on in your neighborhoods as well in terms of what's going on with your stores, your restaurants, the overall economy. Are you seeing a lot of stores closing? Please continue to share your comments. You're really helping out everybody here on this channel. Before we get into it, remember to like and subscribe to the channel. Join us daily to get your updates on small business and the economy and much, much more. And along the way, you could actually learn what I'm doing to protect myself and to continue generating wealth during these uncertain times. All right, I am still out there in the market each and every day. Now, I'm not a financial advisor, but I am holding some cash right now, crypto and some gold, some precious metals, silver, of course. But I am aggressively out there moving and still making moves and trying to gain my share of what's going on in real estate. If you want to learn one of my secrets, how I generate all this wealth inside of real estate passively, that means I wake up every day and I find more money in my bank account. Rush up to the description and check out my crash course on Airbnb. It's currently on a sale right now, so grab that course while it's on sale. And if you'd like to learn how you could partner with me and my current B&Bs, find me on Instagram and ask about my Zoom calls. All right, I want to get into what some of the big banks are saying right now and where they believe the market is heading. We have some opposing thoughts here, and I want to understand what all of your thoughts are as well. Because headlines are reading right now, JP Morgan says growth will re-accelerate. Stop worrying and buy these recovery stocks. I just love when they say, stop worrying, don't think about anything, just go to this list I've given you and buy everything that's on it. Oh boy. All right, JP Morgan put out a list of stocks they feel will continue to grow as these recovery phases continue to move forward. Stocks like Southwest, GM, United Rentals, MGM Resorts. I'm actually happy to see MGM and Southwest are on here because it tells me that travel will be picking up. The Gap is on here, TJ Maxx, PNC, and Bank of America. Now, I'm actually continuing to see high bookings for my B&Bs as we're heading into the winter. However, I'm not sure they will be flying, okay? So I don't know if Southwest is the answer here. Because what I'm seeing right now is that individuals are traveling within a 4-hour radius around the B&B, which typically indicates that they will be driving to the B&Bs and not necessarily flying. Now, on the opposition, Goldman Sachs says higher taxes are the biggest risk to U.S. stocks. Thomas Frank of CNBC wrote, tax hikes will affect U.S. stocks, as what Goldman says. All right. Now, they've gone and said that this is primarily around the corporate tax increase. I'm going to agree with them on this one because if you think that the corporate tax increase is not going to hit the consumer, you guys got another thing. You got to really rethink your strategy here, okay? Because what they're recommending right now is to go at high quality stocks, potentially smart investments over the next few months. Google parent, Alphabet, Home Depot, and Raymond James, United Health. That's what they're calling these high performing, high quality stocks with high scores. Now, of course, some things that will affect this, wages could potentially go up. And we are still seeing that we are in the red with our buying power. Even though wages are going up, prices are still climbing related to supply chain issues and inflation. So let me know in the comments. I want to hear from all of you. I want to know if you believe that inflation right now is just transitory and that the prices will go back down. I'm saying absolutely not, okay? I'm seeing that because prices are going up and salary is going up, that this is going to continue to stay high. It's not going to go back down. All right. Now, we know that the numbers inside the inflation numbers were played with a little bit. It's publicly announced that it's about 5.3%. However, there's some negative bonds in there that really bring the number to about 13%. All right. So it's much higher than you believe. Let me know in the comments if you're seeing across the board as you're out there buying something, if you're seeing prices are higher than what you've expected to pay back in, say, 2019, 2020. All right. Now, we do know that supply chain is also not helping us with this cause of bringing prices back down. There's been an increase to the cost of renting a container entering into the US because the cost of a container ship right now, especially on spot buys and last minute buys, is averaging about $15,000. This is compared to $2,500 back in 2019. I mean, that is a pretty substantial hike, and it does hit prices in the stores. This will certainly affect the upcoming holiday seasons as we're heading into Christmas, because look around, all right? Go out to your local store. I was at Kohl's yesterday with my kids. We were picking up some last minute school clothes, all right, because we knew that the inventory was so low. We were just searching for whatever we could possibly find at this point. And I looked around Kohl's, and Kohl's was practically empty on inventory. You could actually see, wide spaces that are just completely empty with clothing. And then we went into the toys section because my kids love to have toys, and all of the shelves were practically bare. All right, completely bare. They had closeout sales of things that they must have found in the back of the warehouse that they put on the shelves with all these sale prices on them that they just couldn't dump. Okay, it was just unbelievable to see this happening at some big major retailers like Kohl's. And this is going to happen as we head into the holiday season. And container ships remain to stack up at the ports. If you go to the LA port right now, they're seeing about 55 container ships that are stacked out into the ocean, waiting to be unloaded, some of which are just turning around and going right back because they can't wait that long. I mean, there is nobody to unload these things, and there's no transportation to move the supply chain across the country. Foreign countries and foreign ports are suggesting that we need to ease off on demand. This is wild to hear, okay? And it makes a lot of sense if you really think about it, all right? If you lower the demand, this allows other companies to play catch up and allows the whole supply chain to play catch up as they ramp up, all right? Now, I've taught this so many times to manufacturing outfits. I'm an engineer, and factories have learning curves, all right? Especially right now, all of these unskilled workers are coming into the workforce, returning back to work, and all of the skilled workers that have been on the job for several years are taking time out of their day to have to train the unskilled workers, and it causes some issues with momentum and the efficiencies within the factories. Everything slows down. Less items get onto the container ships, less items get into the supply chain, and you're seeing disruptions across the board. It's getting harder and harder to get hold of product that you would typically see and the varieties that we would typically see inside the stores, inside the restaurants. I mean, let me know in the comments if you're seeing similar trends in your neighborhoods as well. Let us know some of the things that you would typically go out and purchase that you're having a hard time finding right now. Now, it will be especially difficult to ease off of the demand heading into the holiday season, heading into the Christmas season. I mean, that's when demand goes up, right? That's when you start to see the stores become overloaded with so much inventory for the consumer to go out there and buy. And that's just not going to be the fact this upcoming seasons. I imagine we won't start to see this easing until January or February of next year, which is far too late to ramp up for the holiday season, okay? Now, with everything being so sensitive, there are some pretty common catalysts right now that could really cause a collapse in the economy. Simple things that could just trigger this and just set this off. I mean, The Hedge came out with a great article on this, of very common things that could occur to implode this entire economy. Electrical outages were one of them, possible wars, or another pandemic, as we're seeing the Delta pick up. But what if banks just get it wrong, right? What if the banks just agree together and just get the whole thing wrong? Now, I was happy to see that JP Morgan and Goldman Sachs had opposing viewpoints today, because it's taking some of my fears of this one away. But, I mean, it could still happen, right? The housing crash. This would be a big one, all right? Now, if interest rates go up at the Fed slightly more than expected, just slightly more than expected, all right? They could go up 2 times of what's expected. The whole housing market will crash in on itself. Part of the problem of this is overpaying for real estate, and right now we're seeing overpaying for real estate 18 up to 20% in some markets. Just incredible what's happening out there. And the last one they listed here was hacking threats on the financial system. Now, we might think that that might be impossible, but Apple News came in with a zero-click hack and urged everybody to go out and update their software. And this is far more common than everybody really believes. There are so many cyber attacks right now and hacking going on with big businesses where they just take them hostage. Apple announced a zero-click exploit vulnerability, prompts Apple to issue an update. This requires no clicking, 0 clicks, and it'll happen without you even knowing it's happened to your phone. They're saying that this is one of the worst ones they're experiencing, prompting this new update. The hack has the ability to be completely invisible inside of your phone, take over your phone, take over your wallets and all of your passwords and all of that data. I mean, that is just unbelievable. You could be having all sorts of charges happening behind the scenes, and it'll be far too late for you to stop it by the time you recognize that it's happened. And how do you get it out of your phone? I have no idea. Probably just eliminate that phone. Get rid of it and change all of your accounts, change all of your passwords, change everything. I don't know how you would be able to fight this one off, all right? So Apple is urging everybody to update their phones today, all right? Don't wait till tomorrow. Get this done right away. And I want to close out with another light article, a little follow-up to yesterday's report. Gavin Newsom was up for recall election in California, and he received a no vote. Now, a no vote means that they will not proceed with the recall. That means he will remain in office as the governor of California. The numbers were kind of in favor of this, primarily related to everything happening in pandemic and the economy. They want to see focus on homelessness and focus on the recovery process right now with all of the uncertainties happening in the economy. He received a no vote and he will remain in office. I want to thank you all for tuning in for your updates, and remember to like and subscribe to the channel. Turn on that notification so you get your updates daily here on small business and the economy. And if you guys would like to continue to support the channel, remember you could rush up to the description and grab my crash course on Airbnb. Learn how I generate all of that passive revenue while I'm sleeping. Money literally just appears in my bank account each and every day by getting into the real estate game with a $50 bill in your hand, cash flow in 3 business days through Airbnb, earning an extra $5,000 to $10,000 each and every month. There's really no major credit checks on this, and you don't have to own the real estate to get this done. If you want to scale the process up, you simply repeat the process over and over again and scale and grow to as large as you wish. That crash course is on a sale in the description right now. Rush up there and grab it. I want as many people to have access to this as possible to start changing your lives here, okay? And if you want to learn how you can partner with me and my current B&Bs, find me on Instagram and ask about my Zoom calls Tuesdays, Wednesdays, and Thursdays at 7 p.m. Eastern Standard Time and 8 p.m. Eastern Standard Time. And I have a new B&B Bootcamp starting in 1.5 weeks. Get on that list for my B&B Bootcamp by finding me on Instagram. It's a fantastic program. I'm going to help you guys grow and start your B&Bs today with personal access to me. That's going to do it for today, folks. I wish you all the best, and I'll catch you all on the next one. Bye for now.